Welcome to Canadian Updates, your trusted source for in-depth analysis and breaking news from across the nation and beyond. Tonight we're tracking a seismic shift in North American trade that could reshape the economic landscape for years to come. In a dramatic turn, a coalition of nations is actively reducing their economic ties with the United States, while Canada steps forward to forge a bold new path on the world stage. This isn't just about numbers or trade statistics. These sweeping changes are already impacting jobs, disrupting supply chains, and redefining the future of international partnerships for millions of people. 7 key trading partners have announced significant measures to curtail trade with the U.S., citing a mix of economic and political grievances that have been building for years. At the same time, Ottawa has unveiled a historic, multi-billion-dollar trade agreement, positioning Canada at the very center of a newly emerging economic bloc that promises to reshape global commerce. The contrast is stark and unmistakable. As the U.S. faces the real possibility of economic isolation, Canada is seizing a once-in-a-generation opportunity to lead. This new Canadian Accord is more than just a trade deal. It's a strategic realignment, signaling Canada's emergence as a primary gateway for global commerce into North America, and potentially shifting the balance of power on the continent. The question on everyone's mind: is this a temporary disruption, or are we witnessing the birth of a new global order that will define the next era of international relations? Tonight, we'll identify the 7 nations pulling back from the U.S., explore their motivations, and examine the ripple effects across the global economy. We'll break down the details of Canada's new accord, introduce its key partners, and discuss what this means for Canadian industries, workers, and families from coast to coast. We'll also analyze the immediate impacts on supply chains, consumer prices, and the political fallout now unfolding in Washington, where leaders are scrambling to respond. The world is watching closely, and the stakes for North America, and indeed the entire global economy, could not be higher at this critical juncture. This is a pivotal moment for North America, one that will be studied and debated for generations to come. Stay with us as we unpack every angle of this monumental story, providing expert insights and exclusive coverage. Let's dive in. The coalition scaling back trade with the U.S. includes Brazil, India, South Africa, Indonesia, Turkey, Argentina, and the UAE. These emerging markets account for over $200 billion in annual trade with the U.S. Their coordinated announcements cite a desire to de-risk from unpredictable American trade policies and persistent tariff threats. Brazil and Argentina point to agricultural disputes and unstable negotiations. India and Indonesia cite tech and digital service tensions, with new U.S. tariffs as the breaking point. South Africa, Turkey, and the UAE are diversifying partnerships, seeking stability beyond traditional Western ties. The message is clear: reliance on the U.S. is now seen as a vulnerability. This dramatic shift in the global economic landscape is the result of years of mounting trade tensions and unresolved disputes between major economies. Over time, there's been a growing global push to reduce dependence on the U.S. dollar and American financial markets, as countries seek greater stability and autonomy in their economic affairs. Tariff fatigue and protectionist policies, such as the American Innovation Protection Act, have frustrated international partners and driven them to actively seek out alternative trading arrangements. Dr. Elena Petrova of the Global Economic Institute notes, "We're seeing the consequences of unilateral U.S. actions, highlighting how these moves have rippled across the world economy. Trust in the international trading system has eroded, making regional pacts and alliances that exclude the U.S. increasingly attractive for many nations. The rise of a multipolar world has emboldened nations to form new alliances and economic partnerships outside Washington's traditional sphere of influence. Aggressive U.S. interest rate hikes have increased debt burdens for developing nations, making it even more urgent for them to accelerate the push for de-dollarization and financial independence. By reducing trade with the U.S., these countries are not only protecting their economies from dollar volatility, but also fostering local industries and strengthening regional ties. The coordinated move signals a new era of economic sovereignty and self-determination for emerging markets as they chart their own course in the global economy. The global balance of power is shifting rapidly, with new trade routes and economic centers emerging on the world stage. The world is watching closely to see who will be the next to join this movement, and how the future of international trade will be reshaped in the years to come. As the U.S. faces a trade crisis, Canada steps up with the Pacific Atlantic Gateway Accord, PAGA, a $150 billion deal with the EU, Japan, and South Korea. PAGA creates a seamless trade corridor linking Europe and Asia through Canadian infrastructure. The focus: green tech, critical minerals, and advanced manufacturing. Canada secures long-term contracts and a surge in investment, with over 100,000 new jobs projected. The deal establishes joint R&D hubs, shared tech standards, and a streamlined logistics network. Canada becomes a linchpin in global supply chains, not just a resource provider. This is a bold declaration of economic independence and a strategic masterstroke. Canada is no longer in the U.S. economic shadow. These trade shifts will be felt across North America, right down to your wallet. Whether you're shopping for groceries, electronics, or a new car, the impact of changing supply chains will touch everyday purchases in ways you might not expect. U.S. manufacturers reliant on countries like India and Brazil now face delays and higher costs. With global disruptions and new trade routes, getting essential parts and materials has become more complicated and expensive for American businesses. The U.S. auto sector, for example, braces for price hikes as supply chains are disrupted. Fewer parts mean slower production, leading to fewer cars on lots and higher prices for buyers. This ripple effect could extend to other industries as well. Meanwhile, PAGA reconfigures supply chains in Canada's favor, giving Canadian businesses preferential access to Europe and Asia. This opens up new opportunities for Canadian exporters and strengthens their position in global markets. Canadian companies benefit from lower costs and greater competitiveness. With smoother logistics and better trade deals, they can offer more products at better prices, boosting their growth and creating new jobs. For consumers, this could mean more variety and lower prices in Canada, while U.S. shoppers may see rising costs and inflation. The difference at the checkout counter could become even more noticeable as these trends continue. The traditional north-south supply chain is giving way to a powerful east-west corridor through Canada. This shift is transforming how goods move across the continent, making Canada a key player in global trade. Ports like Halifax and Vancouver will boom, while U.S. ports may see declines. Increased activity in Canadian ports means more jobs and economic growth for those regions. The economic fortunes of Canadian and American consumers are set to diverge. As these supply chain changes take hold, the gap between the two countries' economies could widen, affecting families and businesses on both sides of the border. Washington's public response is defiant, but behind the scenes, there's a sense of urgency and concern. Lawmakers worry about lost export markets. Emergency meetings are already underway. Wall Street reacts sharply, stocks tumble, and investors flee to safe assets. Major U.S. corporations warn of significant losses as key markets slip away rapidly. The PAGA deal is seen as a direct challenge to U.S. dominance, creating a trade corridor that bypasses America entirely. International business groups praise Canada's strategic move, while U.S. analysts warn of growing isolation. The contrast is stark. Canada builds bridges, while the U.S. risks constructing walls. This week's events signal a possible realignment of the global economic order. Will more countries follow the seven and reduce exposure to the U.S.? If so, it could be the biggest challenge to U.S. economic power since the Cold War. The U.S. faces a choice: double down on protectionism or re-engage globally. Canada, meanwhile, is poised for a new era of prosperity and influence. The success of PAGA will depend on execution, but it could become a blueprint for future trade. Canada's role as a connector between established and emerging economies is growing. The world is changing, and the rules of trade are being rewritten. We'll continue to track every development. Subscribe for the latest analysis. The future of trade is being decided now, and we'll be here to watch it unfold.